All right, all you devils out there, happy Friday. Sam here with you. Oh, we're coming up, it's 1:45 here, Friday the 10th. And I'm going to do a very brief Bitcoin update here. Oh, God, we've been going sideways here. We've been in this little consolidation range here for just about a month now, so not a lot to add here, but we'll just do a quick little review here, and then, we're going to try something very different today in this for a Bitcoin Friday video. We're going to introduce you to something new that we've been working with here, just potentially a way to diversify into some other approaches into the market, so we'll get to that here shortly, but first let's just do a quick recap here. So, I can't imagine there's many that haven't seen this, but just we get new subs on a regular basis. So, so off of the low here, 1, 2, 3, 4, 5, right, and I've got just range expansion on here. So here's the range expansion, 100%, everything cut in half. I've been over this so many times here. I won't dwell on it. The one thing that just to take note of here for any that are seeing this for the first time, which maybe there's one or two, we can solve this either way down here, whether in terms of how we're defining the correction, right? So it could be a WXY. If that's the case, right? If it's an X, then we'd be looking for a 3 here. So we're waiting for this zigzag to complete 5, 3, 5. We've got a 1, 2, 3. This sure looks like a 4. One more down would give us a 5, and now you're thinking zigzag. But there is, all right, interestingly, it can be interpreted and get you to the same area of confluence down here that may present a buying opportunity by doing it through an ABC, which is interesting that you could get there to the same location with the same structure here, but with a different Elliott count to it. Now, so if it's a WXY, we're looking for the 3 here. If it's an ABC, we can still do it. We can still finish here. We're just going to do it through an ending diagonal. Now, so there is a requirement here. If this is the 1, this is the 2, and if this is the 3, well, if we're going to come back for the 4, we got to overlap that pivot, right, to make it a legit diag so that we could come down one more time, right? So thus the pivot here. Now, we got close, but did not get there, right? That must, right? That's not optional. That must. We absolutely have to go up here. So if this is, this could be A, B, C here. Maybe that's a W. We're doing the X, and we're going to come up for a Y. Well, if, I don't know. But if we were doing something like that coming down here, then we'd have the qualification, which would get us into a 1, 2. This would be the 3, 4, 5. So you'd have a contracting diagonal, 5 shorter than 3, 3 shorter than 1. All right, so I think you guys get that idea. Could solve either way and still gives us the same target range here. Now I'm kind of giving it from the full range here. So what have I got up here? From 28 to where we sit heading down. In terms of target range, that would actually be smaller. Let's do it down here. I think 23 to 21 is a pretty good target range. 23 would have you tagging the median line. You'll note that we've tagged the median line once, twice. A third would be, well, it wouldn't surprise me at all. Now, do we get the reaction there? That's the whole question, right? Are we going to get the reaction that those in the bull camp here would be anticipating that we'd get some reaction here? You know, it's an interesting time in the markets, certainly as we are all recognizing the change that's taking place. Just use that term broadly. But, I had to, my wife dragged me to this thing this week. It's just something she had to do for her business, and it was a meetup type of thing for crypto, and it was the history of Bitcoin. And it was just a good reminder, just to take you back to what's the problem that Bitcoin is trying to solve. And I think if you stay focused here, the day-to-day swings here. Now, again, I'm not talking to you short-term traders here, but for those of you looking here, as I sit here looking at a daily chart, with a projection for this to ultimately find a bottom here and then head towards completing this impulse, right? The implication being we're going up for a new high here for that 5th to complete the impulse off of the 2018 low into the COVID low impulse 4, right? We're going to go up and complete that. Well, it's an interesting time, right? It would seem that we have the absolute perfect storm for Bitcoin, right? If I take you back to what's the purpose, or let me rephrase that. What is the problem that Bitcoin is trying to solve, right? It only has one actual purpose. Now, many have reinterpreted that, but if you take it all the way back to the white paper, there is one purpose, that one problem that Bitcoin is trying to solve, and that is the money printing. That's where Bitcoin was born, right? From as a solution to that. How do we create an alternate asset that's beyond the reach of government inflation, right? But just digital printing of more dollars, right? Now we're seeing the net result of that in the inflation. Now, of course, there's more to it than just money printing right now. That certainly has exaggerated the problem. We can't eliminate the macro environment that we're in. You all know it, right? The war, COVID, all of this, right? So this perfect storm of inflationary pressure is in the market. Inflation is what Bitcoin is ultimately designed to solve for. So why aren't we rallying here? That's the question every Bitcoin bull is asking themselves. Why are we not rallying? Well, I don't propose that I can give you that answer. I can give you my thoughts as to why we're not rallying. That we're getting there, but we don't have enough regulation, I guess we got to use that word, to bring in the large dollars here. I don't think it's there yet, but it's coming right now. I was just reading something this morning about the new bill that's working its way through Congress. The couple of senators have got it through. I think we're going to a vote in the very near term. So there are signs that we're heading that direction. But I think the one thing we might be able to look at here and say, in the face of, the CPI print today is about as bad as it's been, and certainly in a long time. Markets are tanking, right? Nasdaq's, we're getting a little bounce here at the end of the day, but broader strokes in the market, risk is being repriced. Certainly debt is being repriced, and there's no way that can't affect the asset classes. So we're seeing those effects, and Bitcoin's really kind of holding its own here. I am somewhat surprised that we didn't see a sell-off when the Nasdaq started moving and we started correcting here. Now Bitcoin has gone with it, but we aren't seeing that same correlation. Perhaps signs that we're starting to crack there a little bit, and that ultimately that separation here, which we're all kind of waiting for, is coming. But it seems unlikely. Just that, not impossible, but seems unlikely that there isn't one more push down here just to test the lows. It would certainly complete the pattern. Now there's no requirement that the market do it. Obviously, right? Market's going to do what it's going to do. But in terms of us looking at this as technicians, if we do get this, I think that's kind of what we're waiting for, is that last potential push down. We complete a pattern, we get into a confluence zone here, and we've got an opportunity right now. As I've said 10,000 times, I wouldn't necessarily, right, if it's up to the individual, be sitting here with limit orders. I want to see signs of strength coming in here. There is an order block here, or a congestion zone, or we can call it what you like. It's just underneath here, so I'd probably draw it that way. Right there. So it's just underneath the 17 high. So this is the last little downswing before we launched up here. So there's probably a reasonable expectation here. Some will be looking for this to come down a little bit lower, maybe pop, there'll be liquidity there, maybe pop some of that, drop into this. It's a minor, but it's there nonetheless. Drop into the supply zone, and perhaps that's the trigger as we get set to launch out of here. Right now, we're not going to do a straight line. Right, the anticipation, we do it in a 5. Right. So with that said, what have I got over here? This is just the again, we're kind of reviewing here if indeed this reaction here is this is the ABC. While we could be heading down, this is kind of an odd little chop monster we've been. It looks more like a triangle, although you can't quite get your arms around it just yet. Hang on a second. God, I always forget to turn that off. Sure looks like, again, I've drawn this many times here. If it's 1, 2, 3, sure looks like, right? Could be 4. Maybe there's a little more push here. But if we're coming down, we'd get our 5 here to finish it. And right, so down here, 22-ish, 23, anywhere in that range, really 23 to 20, anywhere down in the low 20s here, I think is an area of interest. Let's just leave it at that. All right, so there we got that covered. Here it is without, here I still got a little bit of an Elliott count on here, but I thought I would just show you this. Right? It's certainly tradable. And this is just right out of the, I've done several, I think I've done 10 different videos on this, and the emphasis being that this is the blessing here, as well as what makes it hard to trade. as the market's coming up here, now we're conditioned to look for a 50, look for a golden zone, but if the market's coming higher than that, as we see, this was all just massive imbalance as the market sold off here. And so we have massive imbalances here on the way up. We get into congestion, then these massive imbalances on the way down, then again, right? So we're just in a real chop fest here. This is a 60-minute chart. But here, this is very tradable. So as we come up to this one, or again, if you've not seen these videos, just go over to our YouTube. Well, you're on our YouTube channel for members. You've all seen them, but if you're a new sub and you haven't seen them yet, just get over to the SMC content. There are 2 videos here that speak specifically about market structure in crypto and how to approach it. Well, here's a couple of, I mean, I literally, it almost looks like I faked it. Right, but this is the beauty, right? So we're coming all the way back up. So we leave these. There's 2 supply. There's actually one here. There's 2 supply zones that are up here as the market free falls. Right, we break structure on the way down, leaving behind these supply zones. Well, here's the market, right, screaming up higher. Looks like it's doing it in an impulse. Oh my God, I can't sell it. It's screaming up higher. I can't sell that, can I? That's the kind of the whole point of it. And with huge emphasis on the fact, well, if you're fearful of trading that, okay, you got to work on that, right? I can't fix that for you. But what I can do, oh shit, where is it? Oh, come here. Here we go. Okay, so if you're, here, we could do it on this side. All right, so just say you took the edge of it here. So your risk is from 31.6 to 31.9. That's a 300, right? And that's assumed, you know, whether you're trading leverage or spot, right? This is not a high risk trade, right? And you don't have to take an exorbitant amount of risk. But if you're in this trade here, where's your target? Where's your target? All the way down here. Right? That would be minimal, right? Minimal target would be get back down to these lows. What do you got there? That's 7 to 1. Now, but look at the risk reward. That's what I want you to see here. It's about the risk reward, right? So this is the trade you're waiting for. It's particularly, right? Okay, so look at it this way. This is just a reminder here. I'm going to get to my point here. Here I am digressing again. As the market comes back this direction, right? Now, hang on. As the market comes back this way, right? We're coming through here. We're getting to areas that are literally every trader on the planet knows to be looking for a 50 and a 618 golden zone, whatever you want to call it, right? So just somewhere in this range here. They're looking for retracements, right? So if we're going to, so you can see the market pauses here at the 50, keeps going. There's a little bit of a reaction here at the golden zone, but then we keep going. So likely you can look at this and say, it's not unreasonable to anticipate that if we're going to push higher, that those that can move the market here are stop hunting here. Well, so, okay, retracement traders are here. I mean, you could probably see it right here pretty clearly. Okay, so if we retrace up here and we come down here, now we don't get to target here. So someone who's looking for the algo target down here, they've sold it here. So where are their stops now? Right here, right? Or a few ticks higher. That's how retail's conditioned, right? You got to trade this in your profit. Going your way, you're in profit here. Well, at the very least, let's tighten up your stop. So as the market comes back here and we're pushing through here, it's not unreasonable to think that this is a bit of a stop hunt here because this is where the stops are going to be, right? Every major pivot is always where you're going to find a stop. Now you get a little reaction here, golden zone, right? So if they sold it here, put a stop on the other side of the golden zone, here's the reaction, here's the push through. Now, for those that are really, they're being fancy, they're going to sell the 786. Okay, get a little reaction, where are their stops going to be? Right? It's just they're pushing, they're getting all the retracement traders out as they come up here. And this is the solution for when that happens. Right? So if you were to take this trade here and you were holding for target, well, okay, I'd like to think that anyone who follows me would have, or any members here, your worst case here is a scratch. That you're not going to let this move turn into a loser. Right? We come back here, okay, you're scratched. Next trade. Right? And if you sold it here, well, you weren't in it for long, right? But the impact should have been, I mean, like a mosquito bite, right? That shouldn't hurt you there. So you're stopped out. Okay, well, so that doesn't necessarily mean that there's no trade here, because if you're an advocate here and you're looking for supply zones here and you're not just, well, broke the golden zone, so I guess that's over. That's not, no, never what we're saying. But this is just a more objective, deliberately so. It's an objective location to where you might anticipate a reaction in the market based on supply, not some magic number. Where was the supply left? Right? Could there be, look how fast we came out of here. Could this just be orders getting filled that were left behind? Could be, right? That's the part of the theory of the assumption that you're making here. So your risk here is almost not, what do we got there? I mean, 550, I mean, it's non-existent, right? I mean, you can't get in the market and take less risk than that. If you do, you're just asking to be consistently wicked out. You got to give it a little breathing room. So you're on the other side of this trade, all the way down. Now look what happens. This is what makes this hard. But it shouldn't be like, oh my God, they're not going to give it to me again, are they? There's no way they're going to do it again. They couldn't possibly give me that again, because if it comes back here, I sure as hell am going to know what to do, right? Right? Where's the stop? Well, I mean, shit, you could put the stop here on the other side. This is the strong high, so here's your stop. What's your risk reward? Where's your target? Just do it, right? I mean, these are trades. You got to take these. I can't do this for you. You got to take this trade. Right there. Look at your risk reward there. There's another 7-1. They get, see if you're like, oh damn, God, I would have taken that. I wasn't paying attention, or I missed it, or I'm just learning the SMC. Well, here it comes again. Can you take that trade? Right? If you can't afford that risk, this is the wrong business for you. Right? You've got to accept risk. No risk, no reward. Now, what's interesting about this chop is that there was another one here. Now it just broke. But it was right, oh shit, where was it? Oh, you could use either of these, right? Probably right here was the one, right? This last little swing down before we launched here, they created break of structure here, right? So we know this is potentially a demand zone here. Zone in there a little bit tighter. All right, so here's the zone here. All right, so we come down here, tag. Now, you see a wick go through. As you see a wick go through, remember, it has to be a close below to invalidate. Right, so all that's happening down here is we're just tapping that demand, right? Tapping demand. One. So 1, 2, 3. You got you were a little scared there. Oh, you got a second time. Now, where's your target? So can you take this one? Can you take this one? All right, so your target would be up here. Here, reasonable stop. Here, let's get you in the order block. Here, you're in the discount of that order block. Gee, I mean, you almost couldn't get a better fill. It's only 17-1. Right now, see, because when it's down here, it's left behind this supply zone here. So while this might be your target in terms of swing structure, if you're coming right into a cluster here of supply zones, let's not be greedy and wait for the last 4 or 5 ticks. Right? If you're in here and you've got 17-1 on your risk, at the very least, let's tighten up here. Or even better, you know what I'm going to say, right? You took it long, you rode it up to the supply zone, now you take it short. So this should have been, for any SMC traders, this is incredibly fertile ground here. This is what you wait for, you wish for, you hope. God, would it actually do it? Would they actually give it to me again? Would they give it to me? Oh, I missed it. You give it to me again? Not if you're not paying attention to where these are. You just look, oh, chop. Oh, I guess there's no trading here. Oh, no direction. We're trendless. Well, nothing I can do now. Not so. Okay, right. So I think we got that all covered. Okay, so with that, oh God, I want 20 minutes here. Oh, maybe I'll edit this down a little bit. All right, so I wanted to try something different here, but I wanted to just at least visit here because it's not like there's not been opportunity here. So you look out here and you go, oh, okay, I guess nothing going on until we come down here. Well, you come over here, there's plenty going on. You take that to a 15-minute, and there's even more going on, right? But if you're going to trade on the 15-minute, guess what? I got a good solution for you. So I'm going to use that as my segue to transition over here to something we have not done before, right? We've not advocated this. I was somewhat reluctantly drawn this direction here, but in this particular case, I think this may be something that you guys will be very interested in. So I'm going to pause the video here, and then we're going to transition into part 2. Okay, so all right, guys. So now that we've had a little bit of an update here on Bitcoin. I thought we're going to try something very different today, something we don't often do. We are partnering now with a company that I bumped into, let's see, it's been about a month ago. I can't even remember exactly how I got to them. Somebody suggested I take a look. I mean, I get solicited 3 to 4 times a day from people want me to promote their stuff or look at their stuff, or here's a link, you'll make a fortune. And I almost never look at them because they just don't fit. It doesn't feel like it's a good fit for what we're doing. So most of it I just blow off. But when I saw what the guys over at PrismBot were doing, I got interested, and it seemed like they were onto something. It seemed like it would fit in a nice way with some of the things that we're teaching. And in the interest of diversification, it seemed like it might be a nice complement to what we're already teaching, which is, of course, right, do the technical analysis, make your trading decisions based on that. But to have the option to have something running in the background that you understood how it was approaching trading. So you could tweak it, fuss with it. You could work with templates, for lack of a better term, in terms of defaults that I saw were successful, and then allowed for some customization. I thought, this could be a really nice addition to things that we're already teaching traders and helping them find profitability, right? So with that, I thought we would do a little pseudo live stream here. I would introduce you to the founder, and I think he's one of the 2 head coders for the project. And he and I have been just talking off and on for the last month, and getting to know each other and feel like there's a good fit here. So what I wanted to do today is just introduce you to him, let him walk you through what he's developed here at PrismBot, and let you guys decide if it's something you would want to trial. I think you will find these are extremely fairly priced, to put it mildly. I nudge him all the time. I don't think he's charging enough, because this is really high quality work. He's done a lot of really outstanding coding to make this all fly. And I would tell you before I hand it off, I would just share with you my results. So what I did, which is very much like I would anticipate anyone would do, is just start with a modest amount of capital and test it. I had already done the back testing, which we'll talk about here as well when I pass the mic off to Ben. I'd done some pretty extensive back testing with it, and I went back and forth with him, and I said, I really like what I see, but I want to trust your judgment because you've had more time to test this and work with it. So what would you recommend for me to start with to give this a fair trial? And so he recommended one of the bots and one of the default settings. And let me just show you what my results have been. Of course, this is a smaller amount of money. I funded the account with $1,000. And this has just been slow but steady incremental gains here. So if we look at it, my results here, it looks like 15 total trades, 80% have been winners, 100% winners on longs, and what do I got? 60-40 on shorts. But nice steady gains. So it's not about the $123.34. It's about the percentage return, of course, right? So over time, this looks to me like, okay, I want to allocate some more capital to this and let it run, and then perhaps diversify bots, because I'm kind of a TA junkie, and I like to fuss and tweak and see, that's good, can I make it a little better? So it really lends itself to that, and I'll stop talking here and let Ben show you specifically what I'm talking about. So with that, I guess we'll hand off the mic and the screen to Ben over at PrismBot. So Derek, if you will work that out on the back end, running the console, and see if we can get Ben's mic hot and get his screen sharing from mine. So I think I have to hit stop share, do I not?
No, you're good. You're good. I got it.
Okay. All right.
Ben,
okay,
go ahead.
Away,
hello, Sam and Monty. Thank you, guys, for having me. I honestly, when you said the guys over at PrismBot and their company, I was like, God, it's like official now. We haven't actually been called a company by another group before, so it's pretty cool. I'm really happy to be here, and I'm excited to kind of just go over what we've been doing for the last 8 or 9 months. I started this with a friend of mine in the US, just coding like 2 years ago. I was just experimenting with indicators and things, and I really wanted to automate my trading because I had been trading kind of by myself, just sort of manually, and getting really emotional and failing a lot, which is something that I actually admire you for. And that's one reason I've really enjoyed your content, because you're really good at this technical analysis side of things, and I'm really bad at that. And I kind of want to learn the Elliott Wave stuff that you do. It's fascinating, and I can't wrap my head around it. But I was able to wrap my head around other things, the mathematically driven things in trading, such as position sizing, risk management. That's sort of where my background comes from. I'm a music and mathematics major in college, graduated in 2010. Gosh, has it been that long? And I have a associate's and a bachelor's in music and a minor in mathematics. So it's essentially calculus down to statistics and performance in music, which I know it doesn't sound like they go together, but music is very math driven. I guess that's just where my brain goes. And I always wanted to have a fallback. So it turns out coding this for TradingView has been extremely tedious and difficult. I've seen a lot of strategies. I've tested a lot of strategies, and I wanted to create my own that I know would be profitable in the long term. And that's what this is. This is not something I've coded for others. It just turned out that others wanted to use it, so I started selling it. But really, every update I do mostly for myself because I want better trading for myself. I trade all these strategies myself. And I just wanted to show, as Sam was talking about, a couple of the strategies. We have the MACD strategy loaded up here right now, which, as you can see, by default, we don't have any results. So actually, these are all strategy builders. You click these settings, and you can actually open it and see all of our information here. You can go to our website from here. You can join our free Discord. We have a lot of settings at the top that I'm going to just kind of skip past for the moment. We have here global strategy settings, where you can decide if you're going to go into hedge mode, normal mode, early exit, and reversal. If there's any confusion about a lot of these, I try to put tooltips everywhere that explain everything in as much detail as I can. And we also have a pretty detailed solutions page. So the way these strategies work, like I said, they're strategy builders. So what you do is you go down to like the MACD strategy settings, and you can enable this, and then you can tweak your settings, choose what strategy type you're using. So for example, I might use the histogram filter, which basically it's just, if you have an MACD, you've seen it before, you know, there's a top and a bottom section to the histogram. That's what that would do. It would just filter long and shorts by the histogram. I like to use that with the ADX. And one thing that I was talking with Sam a couple weeks ago about is that the way we approach our strategy building is that we like to kind of think what retail does and do kind of the opposite sometimes. And for one example of that is, I'm going to click this button to override the MACD values. I'm going to set these fast to 26 and the slow to 12. And what this does is it actually inverts the MACD so that the histogram is actually upside down. And so this will actually create, just from using this one, we can see we do have some profitable results. They're not amazing because we do have a bit of a sideways movement here in the equity curve, but what this is really just a filter. And I want to then add another strategy to it. So you can actually stack strategies together. And one that I like to use, that we actually have this, and I'll show you this in another strategy in a minute, I enabled the ADX and the DMI channel strategy, or the DMI strategy, sorry. And I can see here now I have a much better win rate and about 101 trades. And we can actually even do deep back testing to go, I don't know, what is that, like 4 years into the past? I don't know if it actually goes back that far. Sam, do you know how far back TradingView data goes? I don't actually know.
I don't know. I think it's like it's asset specific. So for example, Bitcoin, I know if I go Brave Liquid Coin Index, I can go all the way back to the first when it first was traded. But I don't know the parameters specifically from asset to asset.
I don't know if this is actually working. It seems like it doesn't want to load. TradingView, let's go. So well, I guess while that's loading, I'll show you some other settings. We can actually go down here. We can see we can tweak everything, right? I try to create decent enough default settings that anyone can work with. So we have a whole bunch of different size strategies. We have the MACD here, the ADX, the EMA. You can have up to 3 EMAs on your chart, or you can actually change it to HMA, SMA, SWMA, or VWAP. We have a bull bear power, a volume flow, and a consolidation zone filter. So these are all the different strategies. I'll skip the details on it for the moment, just to let you know they exist and you can mess with them. once we get down to the base of the backtesting settings, we can actually see some things like you can turn on or off the win-loss labels. You can show different things. You can limit the results to certain date ranges. You can enable certain time sessions to not trade. So these are if you don't want to trade in specific times. You can also filter days of the week, which is something Sam mentioned earlier, was you can filter out Saturday and Sunday, which I like to do because weekends are not volatile enough. For me anyway. So then we have our basic order settings after that, which is an important part. So by default, we use risk to reward ratio trading, which I'm sure everyone here is familiar with, I hope. We have, in this case, by default, a 1.5 to 1, and you can change your take profit and ATR settings here. We have something really special that we've created. It wasn't even my idea, so I can't take credit for it, but I can give credit to someone on our team. So at least it came from us. That's the important thing. So it's called require close below stop loss. And this is a feature that I really like. And I'll just show what that is on the chart here. It's actually a lot easier to show it than it is to explain it. So essentially we have two stop losses. We have an emergency stop loss, which is the orange line, and we have the main stop loss, which is this red line. So what happens is if the strategy closes beyond the stop loss, which it actually did right here, then it will close the trade. However, we don't want to just exit at those points. And the reason why I say that is because there's a lot of times in crypto where you'll have the price just goes crazy. Like it just dips and does, what's it called? Stop hunting. And you just get stopped out immediately. So we have this thing where we want to wait for it to close at the, I guess that you can call it at the order book on the 15-minute time frame in this case. And this is a great example where it actually exited right at the orange line instead. So it actually uses this as your emergency stop. This is how much you're willing to actually risk past your stop loss. You don't want to risk too much and just let it like rip down here like it did and lose significantly more. That's actually would have been almost double your initial stop risk. So this is something we've taken great care and consideration to. I don't know. Have you used this feature, Sam? What do you, or Monty, what do you guys think of it?
I have not used it yet.
You have not used it?
No, I haven't, but I like the idea.
Yeah, this is something we've actually found to, I guess, deep backtesting really just isn't working. So we have actually found it to really do a good job of increasing the profitability of strategies. So if I, for example, disable it, I think we'll see it update. Give that a second. Yeah, so we can actually see it increased it by about 2%, at least according to the data that I see here. And it also reduces the drawdown, if I'm not mistaken. No, it actually increased the drawdown. Interesting. So I think that's probably because it's a little bit more risk, you know, like just slightly more. But you do get that increased win rate, and of course the net profit goes up. Another thing you can do here is set your leverage on your exchange. So if you're using, say, 10x leverage, you can set the 10x. Now this does not actually change anything with the trading on its own. It will remove any trading caps that you have, but you'll see that it's not like it's multiplying your quantity. This is something I've seen a lot of strategies get wrong, is that when you're trading with leverage, you're not actually multiplying your position sizes by like 2, 3, 4, 5, 6. That's called gambling, and that's not really what I'm here to encourage. So what this really does is it multiplies your available equity. And then that means that if you're trading, say, 2 or 3% risk, if your strategy calculates, hey, we need a position size that's bigger than your equity, we can actually open that position because you're using leverage. So that's what we're using it for. It's more of a tool and not so much of a just multiplying your position sizes. I hope that makes sense. The other thing here is that if we go to the quantity calculation type, this is something I really like that we have new. It's called volatility based quantity calculation types. And you can see that, for example, we have strong, standard, and weak volatility risk-based system. So for strong, it doesn't necessarily mean that's a stronger amount. So I actually like to do it in reverse sometimes, depends on the strategy I'm using. And I think in this case, yeah, we actually do see the win rate go up, not the win rate, the net profit go up quite a bit just by changing this. So what this is using is the Keltner channel bands right here. And depending on where in the channel the price is at the time of order execution will dictate whether or not we enter with strong risk, weak risk, or standard risk. And strong is considered strongly outside of the Keltner channel bands, and weak is considered within. So that's what I mean by the risk. It doesn't necessarily comport with the terminology, if that makes sense. So you may actually find that weak might be better as a lower value because it's within the Keltner channel. I don't know. This is a thesis that's fairly new, so we're still kind of trying to understand it ourselves, but it's something that I found really interesting and cool, and I wanted to show that off. So I think that's about it for the strategies. I mean, there's a lot of other settings here. I could go into great detail, and I really don't want to bore you. Like we have martingale, we have ATR settings, we have trailing take profit stuff, which is something that I really, really like. But I guess I'll let you kind of maybe direct me a little, swing me back into something, because I feel like I'm rambling a bit. I don't want to go off too much.
No, well, you know, the thing that is so appealing to me is that ability to just kind of look at something, look at those results, and then just my natural instinct is to tinker with it. So, oh, that's good. Okay, how am I going to make it better? And all the flexibility and that ability to customize it so that no two are exactly the same, I think is very appealing. But then ultimately that comes back to, okay, well, you think that's good, but let's look at the numbers. How does it back test?
Right.
And of course, the trade-off with back testing is that there's a bit of an assumption we make is that conditions will remain the same. And that's, I think anyone who's experienced trading automation recognizes that's not always the case, right? That back testing needs to be monitored. So if things are changing, you might have to change some of your parameters to accommodate either increase or decrease in volatility, or something's that used to be working is not working. So those kind of things are not, I consider that not a weakness, but a strength to it, in that you're constantly maybe the wrong word, but periodically you're adjusting to changes in the market dynamics, volatility, et cetera. So I think one of the key points that you mentioned is the ability to turn it off and on. So per my results, and again, per your suggestion, I've been running 24/5. And some of the trades are going off when I'm asleep. I wake up in the morning and I see, okay, alerts went off, and how'd we do? And you know, what are the results? So just in the interest of that very diversification of getting access to trades that have set up that you're either away from your screen, you're asleep, or you know, that kind of automation is so appealing, so you don't miss these little opportunities. Now, the bot that I've been running is running off of a 15-minute chart, which is rare for me, particularly in crypto, very rare for me to trade on anything less than a 60 minutes. So having this thing running in the background, I mean, it's partly I don't have time to do it. So that's a piece of it. But having these bots running on these smaller time frames, assuming, right, you have confidence in them and they're showing profitability here, is just really nice diversification. And there's a little bit of a, you know, it's kind of fun to check in and say, hey, how's the bot doing today? Right. So if you had a bad day, which could be, right? Hey, my bot's kicking ass, right? Or you had a good day. Damn, look at this. My bot's kicking ass too. So there's a kind of a pleasurable experience that comes from this, right? And if you feel like, we're in conditions here where I'm experiencing drawdown, well, you turn it off, reevaluate. Is this the bot I want to continue working with? I.e., you know, if you're working with something that's friendly to oscillators, maybe all of a sudden we're in a rip-roaring trend, and something that's oscillating related here is not the right fit for the market. So I might look for, you know, the MACD or something that would be more accommodative to sustained trend. We get sideways, as we've been in Bitcoin for it feels like a century. We get sideways. And then I know, okay, based on what the kind of trade patterns we see, I know that this lends itself more to an RSI or an oscillating oversold, overbought. You know, those are really poorly chosen words, but this is lexicon of the market, so we got to stick with it. So
yeah,
you know, maybe overextended, underextended, those kind of things. So adapting, I like that. So first, I like that there's multiple bots. So if the market condition changes, I've got 5 bots to choose from. And then within those bots, I can tweak accordingly based on my own experience. With most traders will have worked with some of these, because it's not like he's putting in exotic indicators that nobody's been exposed to. These are tried and true and proven over many, many, many years of trading. So it's just finding that that right combination that's the allure to it. Like, oh, I'm going to find just a little tweak that's just right because I think based on my experience, this is what's going to work here. And then back test it. It looks good. Let it rip with a controlled risk, right? That's the whole point of this. So I think if anything, maybe because we don't want to go on for 2 hours here, but if we did maybe showed them how you might approach it just in one use case. So okay, let's use. I don't know. What do you have a particular go-to other than the one that you got me on that you might want to show, but given the market conditions, maybe the MACD one, or I'm a huge advocate, use it in day trading every day of Keltner channels for that volatility range. Either of those, just how someone that's new to this might approach. Okay, so I just got my demo. I want to check it out. So based on this, here's where I might start. Let's test it. And then if I wanted to tweak it, so maybe we just do one little use case here. Okay, here's the defaults, right? You can look at the results. And then if you wanted to tweak it, here's maybe a couple of places where you might go to, never losing track of the risk management that needs to be, always, right? I love that you focus as that was the core of your experience with the market, which is the exact opposite of most people. Most people come in, they're rip roaring on the TA, but they go, oh, that risk control, that's for other people. The fact that was your foundation and how you approach the market, I think is part of what attracted me to everything you're doing here. So maybe just give them that experience of, okay, I've got the demo. Now what the hell am I going to do with it?
Right. So that's actually, you brought up a couple really important things that I'm going to have to touch on there, which is perfect. So we'll head back to the MACD strategy. This actually works in the RSI strategy as well. And that is my favorite one, which is currently just this ADX strategy. This is probably one of my current favorites that I'm using. And I'll just show you, I don't know if anybody here is not familiar with it, but we do have a directional movement index, right? So this is the directional movement index indicator. I like to change the colors on this really quick. So I'm going to change the DI plus to green and the DI minus to red. I don't know why that's not default, but we have here, for example, ADX indicates volatility. So high volatility on the ADX would be something like 40 to 50, somewhere in that range. So maybe around here-ish. So anytime the ADX is up there, what we do is we look for, okay, is the green line higher? Is the red line lower? And there's more in the background that I don't want to give away all the secret sauce. There's some other little tweaks in the background that we do to that detection. But for the most part, it's essentially ADX is high, green line above red line, we go long, right? It's really pretty much that simple for the most part. And like I said, there's other little tweaks in there, but that is probably my favorite one that seems to work fairly consistently. And you could see it's literally just a checkbox. Like you go in there, you tick the box, you select the ADX and DMI, and it just works. Like I've tried to select what I think are the best optimal default settings for that. You can obviously tweak this. So for example, we have the DMI crossing point. So you have the green and red lines. If you want those to have a different crossing point, like say 48 instead of 50 or 45 or whatever, you can tweak these values yourself as well. And actually see the win rate went up a little bit there, and was kind of cool. So you can do different things like a rate of change if you want to. I almost never use that, but some people might want to use it. I don't know. That's not really for me. But it's there. And again, win rate can go up with that as well. So it's not just win rate. Obviously, that's not what's the most important here. But because we're using 1.5 to 1, I think it just illustrates the point. We have our ADX length if you're one that wants to customize it. We also have this less sensitive, more sensitive type thing. This is something I did to simplify for people that don't want to use numbers. People don't want to enter values because maybe they don't know what these values mean. So we try to make it more beginner friendly, where we have something like the less sensitive means that it's a little bit obviously less sensitive to movement. So maybe the ADX is, I think, a little longer in that case, 21 in that case. And we do see the profitability kind of drops on that one. We have more sensitive, and you would have to tweak this to maximize the potential on it, because now you're kind of changing our defaults. But that's kind of our approach to it, is that we like to have good default settings that we are using for the most part, that you can kind of get a handle with and get in touch with there. And we do on some of these have multi-time frame analysis as well. I don't necessarily use that either. So I just use the standard.
It's easy
stuff.
to overcomplicate it, right? I think people
It
have
really
a tendency
is.
to think more is better. And in my experience, has been quite the contrary, right? To simplify it. In fact, most successful longer term traders, you'd be shocked at how simple their setups are.
Yeah.
But so I know there's a temptation to tinker and go, oh, more, let's add this, let's add this, let's add this. But I think what you'll find, and I would encourage you to do this for anyone listening who does some testing here. It's natural to do that. Test it, tweak it, then look at the results. Now go back to something very simple. Start with one. Does adding another filter improve it or not? If it doesn't improve it,
right.
Why are you still looking, right? If you've got something that's profitable right there, test it in the market. Now, one thing we ought to mention, Ben, is the options they have with regards to exchanges. And so, that actually opens up a couple of things. One, I want everybody listening to be aware that the way Ben and PrismBot have set this up is that you get a free demo of this. So before you make any investment, and modest as they are, but even before you make any investment into this, you can demo all of this and trade it manually yourself. You're going to lose that benefit that I was talking about earlier of trading while you're sleeping, but you can at least look at it and then understand it, so you can see it on TradingView where it would have entered, where it would have exited. Are you in alignment with that? Does that make sense to you? If not, maybe you want to tweak a little bit based on what you're seeing there. Then you get something that you like, and now at that point you got to make the decision. Okay, do I want to make the modest investment into getting this automated, or do I want to just continue to watch it, test it, tweak it? If you do decide to make that decision to pursue it with capital, I don't even know if there's a minimum amount, but you could pursue it with a very small account. But then the exchanges that are available to them, right? So right now it's Bybit and Binance, if I'm not mistaken.
Currently, Bybit and Binance. We will be adding more. I think the top one on the list right now is FTX, but again, it's currently, it is currently just Bybit and Binance.
It's futures only.
Futures only,
contracts.
yes.
Futures only. All right. Okay. But thinking spot down the road.
Currently futures only, and we will be doing spot down the road. It's probably a couple months out, just because development is taking time on that, and we have other issues that we're dealing with as well. So we are trying to get that out quickly. Yeah.
One thing I would tell anyone who's doing a little testing is join the Discord. You'll see lots of other users expressing their experiences with it. A lot of Q&A. It's a well-run Discord. There's easy to get answers, easy to get access to information. There's lots of video content in there, because it took me damn near 10 tries to get the thing to fire, but that's just my own inexperience working with bots. Once Ben showed me how to do it, it was right? But it takes a little tweaking, but my point being, he's got good video content in there that'll walk you through the setup. Okay, here's how to deal with this. Here's how to get your alert setting. Well, if you change this, then you got to change the alert. So some of it, there's a little complexity if you're not used to working with bots. But once you get through that little learning curve, then it's drop dead simple, right? In terms of getting it to automate and fire, which again,
part of it is just the TradingView weirdness. TradingView can be a little weird. It's not your fault, Sam. It's really not.
You're nice to say that. At about 9 tries, he's like, "Oh my God, who is this guy?" Well,
I never said that. I know.
But
there is one more thing that you did
please.
ask me though. Yeah, you asked me something else, which is like more for beginners, I suppose, as you kind of went to that. And I think one important thing is that I think I've got you on one of the brain trust strategies. And
yes, you do.
I
The
think
brain
it's
trust
important
RSI, number 2.
I think it's important to at least show that. So the brain trust strategies, these are strategies that me and my team are working on, who are mostly volunteers. I'm working on that. That's, we're still small, we're growing, and I would like to get these guys like actually on payroll at some point. They're really good traders, and we have in here some pre-built strategy presets, and that's it essentially takes all the thinking out of it for you. I don't necessarily recommend that anyone do that, because I feel like everybody should know what they're trading and how they're trading. And I'm sure you would agree with me there.
Yep.
But I think if you do understand at least where we're coming from with these strategies, and you want to just have something that we're using with our own trading, you can actually use our presets, and we don't detail exactly what they are and how they work. You can see what indicator it is in the top right corner when you select it, but we don't give you the specific setup details just because
I don't
we
think
don't
they
want,
need to know, right? You want to have a
I
broad
don't think so.
understanding. Okay, it's RSI based, but I don't need to know the nuance there. What I need to see is the back testing results before I'd even consider turning it live. Right? Once I see that, okay, well, at least I can see historically how it's done.
And essentially we have, I think right now we have like 10 different strategies, something like that, 9 or 10, however many that is. I'm sure you guys can count. I think that's actually 11, but we have 10-minute, 15-minute, 30, 45, and 1 hour. We have multiple strategies for each on some of them, one for ETH and for BTC, ETH. The reason we don't do it for any other coins is because BTC and ETH are just the most market cap. So we just go with those and get the best results, so bot trading tends to do better when you're using the highest market cap, highest volatility options. So for this, you can select in the drop down if you're trading BTC, what time frame you're on. You can also use automatic mode, and it'll detect both of these options for you. But if you want to select it manually, you can go in here and select that. You can select then which strategy you want. And again, if you hover over the little eye there, it'll show you what strategies are currently available. So for example, if you want strategy number 2, you can load that up. You can go to your strategy tester. Yeah, you're doing strategy 2, and we could see the results. So yeah, there was definitely some when crypto was going sideways for 3 years there, however long it felt, there were some losses in there. But I think that what you'll notice is, and this is something you brought up as well, which is dealing with these different market conditions, is that we have tried to create these strategies so that they will attempt to stay out of the bad market conditions as much as possible. And you can see that just the frequency of trading during the sideways period is way less than just last week. When
there was also a period where there was no trading. And I would come in and it would be like no trades. Like, wah, wah. I mean, it was like I was disappointed. There were no trades. Like, damn. I was kind of looking forward to seeing how it was doing, but it was being the filters, but in this case, the ADX filter was keeping it from entering the market. Right? So here I'm excited to see the results, and it's not allowing a trade to fire because it hasn't met the requirements. And I'm thinking, shit, I'm looking at the 15-minute chart. It looks like it's moving pretty well. I threw the ADX underneath and said, okay, I understand why it's not trading. Again, that's so if you were using an ADX and an RSI based trading combination for the bot, you might put the ADX and the RSI underneath and just kind of say, okay, what is it doing? Why is it entering here? Yeah. Oh, okay, I get it. That makes sense. Okay. And then that might actually spur an idea of saying, I might want to tweak that a little bit because I can see this is happening. I can see this is happening. I understand why it's taking here, but I might want to maybe loosen that filter a little bit so I get more trades, or I might want to tighten it up. So I'm only going to get the very best filtering option here. That's up to the individual. How much tweaking do you want to do? Right. Some people love it. Some people go, just give me one that makes money. So it really lends that full spectrum of accessibility to it. How do you want to use it? But I take you all the way back to, before you turn the thing live, be very clear that you understand the risk management. How much is going to be risked, right? Mine is risking, God, it's so small. I keep thinking, holy shit, wow, these are tiny, but they incrementally, the percentage return here has been outstanding. So that's Derek, or Monty, did you have anything?
Hopefully that continues.
Because both Monty Crypto and I have been testing this. We deliberately testing different versions of it. Do you have yours up, Monty, to where you can speak to your results?
Yeah, so I've just done the brain trust, just the normal. I didn't have the number 2 or whatever, and I am at 1,114. So put in $1,000 as well. So that's 11.4.
Almost the same as me.
Right.
And you're doing a different one.
Yeah, it's a different brain trust, but yeah, I mean, I haven't touched it, right? Like for the first little bit, we talked about it's not doing anything. What's going on, right? But like you said, it's kept us out of the market, and then I'll wake up and it's like, oh, they took 3 trades, and 3 winners, or, so, and sometimes it even stops you out, right? And it goes the correct way. So it's like, oh, I just barely missed it. But that's where the risk management part comes in. So it's just basically, I mean, I call it mindless, right? Because you don't have to think about it. It just does this thing. And that's, for some people, the holy grail, because they have their job, they have everything else that they're worried about. They just have something that is proven profitable based on back testing. And that, I mean, that's all you need really, is something that's proven back testing wise. You can,
and we actually forward test them for several weeks before we release them. So we do actually test them as well in forward testing. So yeah.
yeah.
But I just wanted to point that out. Anyway, sorry to interrupt.
No. Yeah. It's just, I mean, I like it. It's crazy. There's so many of them, and that you can start, if you start to dig into it and really look at what type of strategies there are. There's a strategy for every type of environment, which it's not something you just turn on and I'll check it in a year, right? I mean, you could, but in a sense, it's not going to give you as much profitability as if you know what all types of bots that they provide, which ones are best in which environment. Obviously, we had a huge move down on Bitcoin, and now we've just been going sideways for almost over a month now. And sometimes bots are good for that, just to trade the range, but then sometimes when it's trending, that's when it's best. So there's different strategies for it that I think people will love, that they can go in and change and then find out what's best for them. But I mean, I had a bot back at 2018 when we were at all-time high, and I'm like, I'll put a Bitcoin in it and see what happens. And I forgot about it, to be honest. And I came back and I'm like, oh, there's nothing there, right? Because it was the wrong strategy for going 20K to 3K, right? And so it was like, well, that was not a good testing, right? There was no back testing. There was just, hey, this is a bot. Let's see what happens, right? And I tested it with real money, and there was no back testing, and it cost. So this is what's nice, is you can easily see on the screen, right? So you either have the strategy tester down below, or you've got the data test on the actual screen. And that's what I like, is I'm not developer savvy, I guess. So the fact that it's got I know what I put in my account. I see a win rate. I love seeing a win rate, wins to losses, and then also total P&L, right? I love seeing that. And that's really what's interesting me on this.
Excellent. Well, so I think we probably got enough people interested here. Now, I know we'll have links underneath the video. This will be added into our link tree, right? So those that are interested, if they want to, if you want to support the channel, this is a nice way to do it. But right, certainly no obligation to do that, but we'd like it if you did that. Those our links, our dedicated links, will be underneath the video. But Ben, if you wanted to just give them a broad overview of the website and where they get access, and a little bit about the pricing. And I'm sure people are wondering about the pricing, but they've said at this point, they've probably already been over to your site.
Sure. Yeah. So the pricing is pretty straightforward. We have a month-to-month subscription model, which is for the first month, you get 20% off, $19.99 for your first month. After that, it's $24.99 a month, or you can subscribe for quarterly or yearly. And for those, you save on the entire monthly subscription for that year. So it'd be $16.66 per month on a full year, all paid at once, obviously. And so it's actually, as Sam was saying, we do price these low, and I do that on purpose. You're not going to convince me to increase the price. You're just not, Sam, because I want people to be able to access. You can keep trying. I want people to be able to access this, even if they don't have large accounts or a lot of money, or just, I feel like these are tools that I want to use more than I want people to be necessarily. This is more people to support my work than it is for me to actually, become rich or anything. And that's not really the intent with selling these. So
I learned that early in our conversations.
I mean, it would be nice.
Right? It wasn't like, oh, let's fire this thing up, make a black box, and make a bunch of money. It was, no, we can help people in the markets here that are struggling, and that was what drew me to it.
Right. Yeah. And it does come with the Prism bot for free. So you actually get to use that one position at a time for free. You can increase that to multiple positions at a time if you would like. But if you're only wanting to trade BTC 15-minute one bot, you can do that completely free with our bot system. And it's really easy to get in and do that. So, and I if you want me to go and do that, I could, but we do have videos on our channel that go over how to set up the Prism bot.
Is that on
and
your
get in there
YouTube channel
and
or
start
within the
using it.
Discord?
Well, I think it's on both actually. So
Okay,
yeah, you
good.
can actually see it from the Discord as well.
Okay, yeah, but I do want to encourage people to join your Discord and subscribe to that YouTube channel, because that so far they've done several updates, which I'm trying to keep track of. So they're tweaking, enhancing, updating on a pretty regular basis. So you want to connect with those sources, Discord and YouTube. Watch the videos, right? It'll help you understand how to get it started. And I think that's pretty much all I've got. Now it's just a question of go over, grab the demo, and maybe have a little fun this weekend, play around with it, do some back testing, back test, no live money until you're completely comfortable and completely understand the risk control on the back end. Be sure that that's clear. And as I've done, I would start with a modest amount, get comfortable with it, and then increase incrementally as you develop that confidence with it. I think that's fairly obvious progression most people would take. I'm about ready to drop another 0 on that. And because the percentage returns are good, and now I'm comfortable with it. I'm comfortable with the company. I'm comfortable with Ben. So allocating more capital just is results driven and experience driven. So with that, I think they've got all the links that they need. They've got, actually, they know where to get more information. Of course, you can always reach out to us if you're over in the Discord again, or either ours or in the PrismBot Discord. They're very responsive, as we try to be, and get all your questions answered and help you get started and get rolling. All right. So with that, I think we got a wrap, and I wish you guys a good weekend. I would encourage you to fuss around with it over the weekend. I think you'll like what you see. You got anything else, Monty?
Nope. Try it out.
Okay.
See what you
Thank
think.
you.
Thanks very much, man. Appreciate it. And I hope guys
Thanks for having
are
me.
going to do well here and jump in and be profitable as we've been. All right, guys, you have a good weekend. We'll catch you on Monday for our next live stream. All right, guys, take it easy.
Later.